As Ed just said there, Suncorp shares today were strong, and that belies almost the company's first half results. They took a battering from insurance claims after some wild weather and fierce competition in the home lending market. Cash earnings fell 29% to $361 million. The biggest hit came in the insurance division, where profit dropped 56%. Suncorp says, get this, it experienced 19 separate weather events and more than 50,000 natural hazard claims in just 6 months. The company's banking arm performed better, up 5% to $200 million, but here margins were squeezed by competition and ultra-low interest rates. Suncorp's net interest margin fell 12 basis points to 1.97%. Now, all this led to the company cutting its dividend for the half year, down 3 cents to 23 cents a share. So let's bring in here the Chief Executive of Suncorp Bank, Steve Johnston, who joins me now. Steve, many thanks for your time. Can I just start on that home lending area? There's been a lot said in recent days about bank margins being squeezed, competition being white hot. I noticed Macquarie today, for example, came out and said it had gained market share. So I just want to ask you, as the boss of a bank, would higher interest rates help the margins that you're receiving on those home loans?
Yes, I think... hello, Ross. How are you going? And yes, I think that's probably the case in due course. We have been operating in a low interest rate environment, and that's been absolutely necessary through the COVID situation. There's also been some stimulatory support on the funding side for all banks. So the erosion of net interest margin is not a Suncorp story particularly. It's an industry-wide story, and competition is kicking up as others have reported in recent times. So we focus on our role as a regional bank. People like banking with regional banks. We've got great exposure to Queensland. Our balance sheet's growing strongly again. And we'll manage volume and margin to get the right outcome for both customers and shareholders.
OK, but it seems a bit counterintuitive that a bank would actually be seeking higher interest rates, that in fact you'd be cheering that on, your shareholders would be cheering that on, when many of your home loan customers, of course, it's the last thing that they actually want at this stage.
Oh, no doubt. I mean, I think lower interest rates are also good for the credit performance of all the portfolios. Our bank is performing incredibly well in terms of credit. Loan-to-value ratios are as low as they've been. Our deferred or gross due loans, 90-day plus gross due loans, are the best they've been in 10 years. So credit is very strong. I think everyone understands that economic cycles do move and that we are probably at an inflection point now. Interest rates can't stay low forever. We've got very strong employment. I really do believe in terms of the future, unemployment, levels of employment are a bigger variable in terms of the performance of banks than many of the other input factors that we look at.
So if you think back 2 years ago and you imagine being in this position now, there's no way known as the virus was spreading, as it was starting out, as really the hurt really became apparent at that time, that you could even imagine you were in this position now, your best sort of position in terms of loan defaults in more than 10 years.
They were really tough times, Ross, running both a bank and an insurance company. The stress that was in the economy, in our customers, and of course as a chief executive, you don't walk into your office and pull off a textbook from the shelf to say this is how you manage through a pandemic. So we had to take a very conservative provisioning stance across both insurance and banking. We put a big provision aside for expected bad debt outcomes and, to support the business and support our customers. And I think I would, obviously recognise that there's been some significant stimulatory input into the economy, whether that be JobKeeper, JobSeeker, all the other inputs that have gone in that have stabilised the economy. But I never would have believed that rolling forward to today we would have been in this position.
OK, can I take to the other side of your business, that is the insurance side? And I just mentioned there the number of claims you'd had, the disaster claims from weather events. I mean, it really is quite a significant thing, and this comes down to then mitigation and what government is even doing. You've mentioned this in some of your own outlook statements as we approach the federal election. I'm pleased we've already seen the issue of disaster resilience receive more consideration, because this is a significant risk for not only households, for business, but also for organisations such as yours.
Yes, Ross, look, I've been bagging on about this for 2 or 3 years now, and it feels a bit lonely from time to time. The fact is that for every dollar spent, on disasters more broadly, 97 cents in the dollar is spent, mopping up. 3 cents in the dollar is spent on doing mitigation work. And I see so many projects across the country that could be funded by government, which, for a small amount can actually make a huge difference. And it's not so much about Suncorp or the insurance industry, it's about human beings and people. And I've unfortunately had the experience. It's a great experience for me personally in terms of what we do as a company, but going and giving keys back to people who've been displaced from their home, whether it be through a flood, a fire or a cyclone or something like that. And the trauma, the physical and emotional trauma that they go through that period of time is extreme. And I just think for a small outlay that is stimulatory to the economy, it's lined up against the government's requirements. An investment in mitigation and resilience is critical through this forthcoming budget, through the election campaign, and creating a safer Australia for everyone is really important in my view.
Because it would also seem to me that given the precedence of the natural disasters that are taking place, and storms are the big ones, hailstorms, violent storms that came through last year, New South Wales, Queensland, wherever it might have been. But it seems that really, in many cases, there are Australians right now for whom insurance is almost too expensive, that they're getting priced out of the market because of the risks that they actually face where they live.
Absolutely. And I think investments in resilience and mitigation help reduce the cost of insurance and make it more affordable. But I keep coming back to one point, and that is the imposition of taxes and charges on insurance premiums. 45% in New South Wales of an insurance premium is taken up with taxes and charges, GST, stamp duty, fire service levy. It's not as great in Queensland, it's 25, 26%. I mean, this is a punitive set of taxes that go to those people that are most at risk, and it's proportional to the underlying premium. So if you live in a risky area, you pay more tax. And I've been arguing this 4-point plan, improving public infrastructure, giving subsidies to people who improve their quality of their houses. You can get a subsidy for a solar panel on your roof, but you can't get a subsidy to batten your roof down so that it can manage a Category 5 or Category 4 cyclone. Improving our planning laws. We put too many people in the face of disaster by lax planning laws over a long time, and this issue of taxes I think really has to be on the national agenda going forward.
And you say you've been banging on about this for nearly 3 years now, aggressively to politicians, state and federal. Do you think the message is getting through?
Look, I'm hopeful. I think certainly at the state level there's been some worthwhile projects that have been committed. Levy banks, particularly in my home state of Queensland, there's proposals in Bundaberg and Rockhampton that we fully support. Our levy bank went up at Roma after we had 3 consecutive years of flooding, and it cost us as a company $170 million, and a $10 million levy bank has protected that community every day thereafter and brought insurance premium down by more than a half. So, look, we're making incremental progress, but I don't think we're ever really going to get it on the agenda until we deal with this nationally and we really look at it and say, actually, we want to protect our people. We want to create a more resilient Australia. We want mitigation to be widespread. And we want to avoid the cost, both the dollar cost and also the physical and emotional cost of taking people out of their homes for extended periods of time.
Steve Johnston, Chief Executive of Suncorp, great to chat to you today. Many thanks for your time.